Blackham Resources has released a positive pre-feasibility study for their Matilda Gold Project, which is located in Wiluna, Western Australia. Overall, the results of the PFS were in line with our expectations. The key highlights of the study included an increase in the project's mine life by nearly 1 year. This was a strong result considering the mine life extension only took into account a limited amount of the recent drilling success at the open pittable targets and none of the recent drilling from the Golden Age deposit. Confirmation of the robust forecasted operating costs, which were in line with Blackham's previous guidance. We also note the forecasted all-in sustaining costs are slightly less than the industry average for current gold producers. Confirmation that the initial capital costs will be one of the lowest in the industry for a project of this size and scale. It also confirmed no further funding will be required for the project's development. With the above factors leading to Blackham releasing a strong IRR and an NPV for the project, whilst also confirming the rapid payback of just over 1 year. However, we believe the most important aspect was releasing the PFS itself. As we previously identified, we believe no development study was a major risk we associated with an investment in Blackham, and a possible reason for the disconnect between our valuation and the share price. This report has significantly de-risked the project and provided further certainty on the project's viability. This risk will be further reduced when the DFS is released early next year. The study has resulted in an increase in our base case valuation from an original target of 40 cents up to a revised price of 46 cents per share. The key changes to our valuation include increase in our mine life assumption up to 600,000 ounces. We believe this increase is justified given the current mineable resource identified by Blackham, the recent exploration success, which is largely not included in Blackham's current mine plan, as well as the significant exploration potential we believe that still exists at the project. We have increased our strip ratio assumption and decreased our metallurgical recoveries in line with the PFS, a slight increase to our operating cost assumptions due to an increase in the strip ratio and an increase to our processing cost assumptions, as well as a slight increase to our gold price assumption. However, we note it is still lower than the current gold price. A PDF version of our valuation and financial forecasts is available at the Sophisticated Investor website by simply clicking on the link. As part of our analysis, we also ran a number of upside and downside scenarios compared to our base case and Blackham's current share price. These include a range of different mine life, costings, and gold price assumptions, and we note in all scenarios, including the double downside, there is a premium to the current share price. We believe there are a number of catalysts in the coming 6 to 12 months that will see the gap between our current valuation and Blackham's share price decrease further. These include continued exploration success from all deposits where drilling is ongoing, the release of the DFS early next year. The key outcomes we will be looking for from this study include further confirmation on the current operating and capital cost assumptions, an increase to the mineable resource, as well as a potential increase to the head grade when the Golden Age drilling is taken into account. An announcement regarding a decision to mine has been made and the first drawdown of the senior debt facility. And finally, first gold production, which is due to commence by mid-2016. For full details on our initiation report on Blackham, including a site trip to the project, an investment and risk analysis, as well as a range of management interviews, please visit thesophisticatedinvestor.com.au.